Consumer prices edge up in November as inflation proves resilient. November's inflation data at a glance. The latest data from the Bureau of Labor Statistics reveals that inflation remains a persistent challenge for the US economy. The Consumer Price Index rose by 2.7% year-over-year in November, a slight increase from October's 2.6%. Groceries and used cars, key contributors to rising costs for many Americans. The grocery continues to deliver unwelcome surprises. Grocery prices surged by 0.5% in November, marking the largest monthly increase since January 2023. Essentials like bread, dairy, and fresh produce saw significant price hikes, putting additional strain on household budgets during the holiday season. Core inflation holds steady. Core inflation, which excludes the volatile categories of food and energy, rose 3.3% year-over-year in November, unchanged from October. Policymakers and economists prioritize core inflation as it provides a clearer picture of underlying price pressures in the economy. Multiple factors contribute to inflation's stickiness. Labor market dynamics. The US job market continues to show strength, with low unemployment and wage growth above pre-pandemic levels. While positive for workers, rising wages can fuel inflation as businesses pass higher labor costs on to consumers. Supply chain recovery. While global supply chains have improved since the pandemic's peak disruptions, ongoing issues in key sectors, such as semiconductors and energy, continue to exert upward pressure on prices. Energy price volatility. Although gasoline prices have moderated in recent months, global events and seasonal demand swings make energy prices a persistent wildcard in the inflation equation. The consumer perspective. Budget squeeze persists for households. The interplay of rising prices and economic uncertainty is felt most acutely in everyday expenses. Shoppers in urban centers, like New York City's Flatbush neighborhood, report cutting back on discretionary spending and hunting for discounts amid rising grocery bills. What's next for inflation? While recent inflation data aligns with economists' forecasts, uncertainties abound. Factors such as geopolitical tensions, unexpected supply chain disruptions, and policy changes could sway the inflation trajectory in the coming months. Key takeaways for businesses. The latest inflation data offers mixed signals for businesses. Cost management. Companies face continued pressure to manage rising input costs. Effective strategies, such as renegotiating supplier contracts or adopting technology to improve efficiency, will be crucial. Consumer behavior shifts. Persistent inflation may lead to changes in consumer spending patterns, with increased emphasis on value and affordability. Businesses that adapt their offerings accordingly stand to gain a competitive edge. Monetary policy impact. Interest rate cuts could ease borrowing costs for businesses, creating opportunities for investment and expansion.